All right, welcome to the deep dive. You know we love it when you guys send in stuff you want us to dig into. And you sent us something really interesting, this crypto hustle thing. Mastering daily trading on Coinbase for maximum profits.
Oh, yeah, this one looks like a fun one.
Yeah, for this deep dive, we're going to take this crypto hustle document and we're going to, pull out the essential knowledge and strategies to help, you guys, our listeners, really get to grips with this idea of trading cryptocurrency daily, especially on Coinbase.
So not just a surface level summary, right? We want to go deeper. We want to actually give people the tools to navigate the crypto markets on Coinbase, and understand what really drives success.
Okay, so let's be real for a second. This whole crypto world, it's exciting. It's, it can be a bit of a wild ride. There's huge potential, but it comes with some serious challenges. We're talking about prices that can swing dramatically, keeping your digital assets secure, and then the whole constantly changing regulatory landscape.
You got it. And that's exactly why we're doing this deep dive. We're using Crypto Hustle as our guide to give you a practical and actionable understanding of how to thrive in this environment.
Okay, so the document starts by, painting a picture of the overall cryptocurrency market. Right off the bat, it emphasizes how fast things move in this space and how important it is to be prepared for both big gains and, potentially significant losses. It's part of the game.
And one of the first things that really jumps out from the document is the sheer diversity of the crypto market. I mean, it goes so far beyond Bitcoin.
Oh, absolutely.
You've got this whole universe of altcoins, and as the source points out, each of them has a unique angle.
Yeah.
You've got your privacy coins like Monero and Zcash, then you have the DeFi tokens, the whole world of decentralized finance, which is trying to, change how we think about financial services. And of course, you can't forget about NFTs, the non-fungible tokens.
And that's what's so fascinating about this space. It's not just one thing. It's like each of these has its own underlying technology, its own market cap, its own daily trading volume.
Its own community.
Right, a whole community of supporters, developers, and enthusiasts. And the source makes a really good point about the opportunity in finding those, those hidden gems, those projects that are potentially undervalued.
Huge opportunity there.
But you really got to do your homework. Crypto Hustle really emphasizes that you can't just blindly jump into anything.
Oh, absolutely. And that kind of leads us to, I think, one of the most important things to understand in this whole space. Blockchain technology.
Yeah.
The source makes it really clear that if you want to be successful in the crypto world, you need to grasp what blockchain is. It's this, shared digital record that's secure, transparent, and nearly impossible to alter.
It's basically the foundation of how cryptocurrencies work.
And
the book also talks about how these blockchains actually agree on transactions, how they reach a consensus. Like, Bitcoin with its proof of work, that requires a ton of computing power.
Right. Very energy intensive.
Then you got proof of stake, which a lot of other altcoins use, and it's, a lot more energy efficient.
Much more sustainable.
Yeah, it's fascinating how these technical choices that, the developers make can really affect everything from how quickly transactions are processed to the overall security of the network.
Totally. And of course, you can't talk about cryptocurrency without talking about price volatility. It's kind of the defining characteristic of this market, right? And Crypto Hustle breaks down the main drivers behind these, dramatic price swings, starting with market sentiment.
Yeah, sentiment.
How news, social media buzz, and just the overall, mood of investors can make prices jump or plummet in a matter of, minutes sometimes.
It's crazy, right? One unexpected news story, or one influential figure tweets something and the whole market reacts.
Yeah.
I mean, the book also mentions how technological developments can also play a huge role.
Oh, yeah. A major upgrade to a blockchain or even a newly discovered security flaw can shift the entire landscape.
Definitely.
And we can't forget about regulation.
Regulations, yeah.
This source really hits the nail on the head when it points out that government policies can either be a huge boost to the crypto market or a major roadblock. And the crazy thing is, these rules are different everywhere you go. Every country is approaching it in their own way.
It's a complex landscape. And, on top of all that, you've got the basic economics of supply and demand.
Yeah.
How widely adopted a particular cryptocurrency is by individuals and businesses.
Mm-hmm.
Like usually the more adoption you see, the higher the price tends to go.
Yeah.
And then you have these macroeconomic factors too, like inflation and interest rates.
Which can really influence people's appetite for risk. And, what I think is so important about how the source presents all this information is that it's not about just trying to guess what's going to happen. It's about really understanding these forces. It's about analyzing them carefully, staying informed, being aware of the news, and actually utilizing the analytical tools that are out there to track trends and make sense of the data.
And this leads straight into the absolute necessity of doing your due diligence before you even think about investing a single dollar. The book has a really comprehensive checklist for evaluating a crypto project.
Oh, yeah, it's thorough.
Reading the project's white paper to understand their goals, the tech they're using. It suggests really looking into the team's background.
Their experience, their expertise.
Yeah, and seeing how active and engaged their community is, and even checking if their code has been audited for potential vulnerabilities.
It's about, really kicking the tires and making sure it's a solid project.
Exactly. And it also mentions analyzing the cryptocurrency's total market value, its market cap, and the daily trading volume, to get a feel for how significant it is in the market and how easy it is to actually buy or sell. And, I think it's really important that it reminds you to pay attention to the specific crypto regulations in your own country or region, because those can be totally different everywhere.
Right. Different rules of the game depending on where you are.
The main message here is this market is super speculative.
Yeah.
Don't put in more than you can afford to lose.
Absolutely.
And remember, spread your investments around. Diversify. Yeah. That's one of the key ways to manage that inherent risk.
And it's interesting. The source goes beyond just talking about individual coins. It delves into the different types of assets you can find in the crypto market, like DeFi tokens.
DeFi, yeah.
Which give you access to these decentralized financial services, like lending, borrowing, things like that. But it also has a warning, which I think is so important. It makes it clear that this is a very new, rapidly changing area, and it has its own unique risks.
Yeah, very important to remember that. It also covers NFTs, those non-fungible tokens, those unique digital items that have, kind of exploded in popularity. But the book makes it clear that their value can be, wildly volatile and speculative, often driven by what's trending at the moment.
Very much driven by trends and hype.
Yeah, and unfortunately, it also points out that scams are rampant in the NFT space. So even more reason to do your homework.
Absolutely. Buyer beware.
Then there are stable coins, which are designed to have a stable value. They're often pegged to something like the US dollar to try and avoid those huge price swings. But even there, the source points out, stablecoins aren't completely risk-free.
Right. There are things that can go wrong.
Exactly.
And then lastly, it mentions these security tokens, which are kind of this interesting bridge between traditional finance and the blockchain world. They represent ownership in real-world assets, things like stocks or real estate. And the source points out that while they have the potential to make these assets more liquid, easier to trade, they also face a lot more regulatory scrutiny.
Yeah. That makes sense. So as you can see, the crypto market is a pretty diverse and rapidly evolving landscape. It's not just one thing.
Definitely not.
And that's just the overview. Now, let's get into the actual nuts and bolts of using Coinbase.
The practical stuff.
Yeah. So the source has a whole section on getting started with Coinbase.
Right.
And it starts with setting up your account.
Right.
And the first thing, the most crucial thing, is making sure your account is secure. So that means providing accurate personal info, going through their identity verification process, which, most exchanges have these days.
Right.
And the book, really hammers home the importance of choosing a strong, unique password that you don't use anywhere else. And absolutely essential, turning on two-factor authentication. That's 2FA.
Yeah.
I know it can seem like a hassle sometimes, but it can really save you a ton of trouble in the long run.
Oh, yeah, that extra layer of security is critical. And it also stresses never, ever, ever sharing your login info or your 2FA codes with anyone, no matter what.
No matter what.
Doesn't matter who they claim to be.
Exactly. So, okay, your account is set up securely.
Check.
Now you've got to get familiar with the Coinbase interface.
Right.
And luckily, the source kind of gives you a good overview of how to navigate it. It walks you through the main sections like your dashboard, where you see all your account info, your portfolio, where you see your crypto holdings, the trading area where you can actually buy and sell, and then any news or educational resources that Coinbase might have.
Right, so you can stay up to date.
Exactly. It also mentions that you can create customized watch lists.
Oh, yeah. That's really handy.
Yeah, you can basically track the specific cryptocurrencies that you're interested in trading without having to search for them all the time. Now, here's something that is really important for daily trading specifically. Understanding Coinbase's fee structure. The source really digs into this, pointing out that they charge fees for different actions like buying, selling, and withdrawing your funds. And, for frequent traders, these fees can really eat into your profits if you're not careful.
Absolutely. You really have to factor those fees into your calculations. Like, you might make what seems like a small profit on a quick trade, but if the fees are high, it could wipe out your gains completely.
Exactly. You also need to think about how quickly you need your transaction to go through, because sometimes paying a little bit more can speed things up. And even the payment method you choose can have different fees associated with it, so it pays to be aware of all that.
It's all about optimizing your strategy, even down to the smallest details.
Definitely. And then, something that can't be overstated, the book circles back to account security.
That's an ongoing thing, right? It's not a set it and forget it thing.
Yeah, absolutely not. You got to be constantly vigilant, particularly when it comes to phishing scams. Those deceptive emails or websites that try to trick you into giving them your login information?
Yeah.
Always, always, always make sure you're accessing Coinbase through their official website or app, and get into the habit of regularly reviewing your account activity.
Yeah.
Just to see if anything looks fishy.
Right. And if you see anything that's even a little bit suspicious, don't hesitate to contact Coinbase support directly. And make sure you're keeping all your software up to date. Those updates that you get for your phone and computer?
Yeah.
They often include security patches that can help protect you from new threats.
So it's all about being proactive, staying engaged with the platform, and being aware of the potential risks out there.
Totally. It's your money, your responsibility to protect it.
And speaking of being proactive, the book mentions exploring any advanced trading features that Coinbase might offer.
Right, which might vary depending on, where you are in the world and what your account level is.
Exactly. So, as you become a more active trader, it's definitely worth checking out what tools are available to you.
Yeah.
And also, it's a good idea to keep track of all the different cryptocurrencies and those other asset classes that Coinbase supports, because things can change. They might add new ones. They might delist others. It's a dynamic environment.
Right. Staying informed about any changes to their fee structure or any new features or security protocols they implement is also a good idea. Just stay on top of things.
Okay, so you've got your account set up securely. You're starting to feel comfortable navigating the Coinbase platform. Now let's talk about the language of trading.
Right, gotta learn the lingo.
The book does a good job of explaining some of these basic terms that can feel like a foreign language at first.
Yeah, it can be intimidating for newcomers, but once you understand the key concepts, it all starts to make sense.
So let's start with the basics. Bid and ask prices. The book does a nice job of explaining how the bid price is essentially the highest price that a buyer is currently willing to pay for a given cryptocurrency, and the ask price is the lowest price that the seller is currently willing to accept.
Right. And the difference between those two is what's called the bid-ask spread.
The spread.
The book notes that this spread is essentially the profit margin for the market makers.
Who are the market makers?
They're the entities that are constantly buying and selling, providing liquidity to the market.
They're always there, ready to trade.
Exactly. And the tighter that spread is, the more liquid the market is.
Okay.
Because it means there are a lot of buyers and sellers, and it takes less to move the price.
That makes sense. So a very narrow spread usually indicates high liquidity, which means if you place a relatively large trade, it's unlikely to drastically move the price of the asset. But on the flip side, a wide spread suggests there's less liquidity, fewer players in the game.
Right.
And it means that if you do place a large trade, it could be more expensive because you might have to bridge a bigger gap between the bid and the ask.
Exactly. Think about it like this. If you're trying to buy a house in a really hot market where there are tons of buyers and sellers,
Okay.
your offer is less likely to have a huge impact on the final price because there's so much competition. But if you're trying to buy in a slow market where there are very few buyers and sellers...
I see. Your offer could have a much bigger influence on the price because there's less activity.
Precisely. And it's the same principle with cryptocurrencies. A very liquid asset like Bitcoin will typically have a very tight spread, maybe just a few dollars difference between the bid and the ask. But a less traded altcoin, something that doesn't have as much volume, might have a much wider spread.
Okay, that makes sense. Now let's talk about the different types of orders that you can place on Coinbase. The book breaks down market orders where you're basically saying, hey, I want to buy or sell this right now at the best available price.
Immediate execution.
Exactly. And it's great because it generally ensures a quick execution, which, in a fast-moving market can be important. But you do sacrifice some control over the exact price you get.
Right, because the market could move in that split second between when you place your order and when it actually gets filled, and that's what's called slippage.
Slippage?
Yeah.
Okay.
Then you have limit orders, which give you a lot more control. With a limit order, you're basically saying, hey, I only want to buy or sell at this specific price that I've set.
Okay, so if the market never reaches that price,
Yeah.
your order doesn't get filled, but you have more control over your entry and exit points.
Exactly, which can be really valuable for managing your risk.
And the source does a nice job of connecting these order types to different trading scenarios. Like if you absolutely need to buy or sell immediately, maybe you're trying to catch a specific price movement.
Right.
Then a market order might be the best option, even though you risk some slippage. But if you're patient and have a specific target in mind,
Yeah.
then a limit order can be a more strategic choice.
Much more precise.
Then the book dives into the really important topic of stop-loss orders.
Yeah, these are essential for managing risk.
Absolutely essential.
A stop loss is basically an automated order that tells the exchange, hey, if the price of this cryptocurrency drops to this specific level that I've set, sell my position automatically.
Like a safety net.
Exactly. And it helps you to protect yourself from those unexpected, sometimes dramatic price drops. But the book really emphasizes that setting those stop loss levels properly is a skill. It's not just a random thing.
Yeah.
Set it too tight, and even a small normal price fluctuation could trigger it, taking you out of a potentially profitable trade for no good reason.
Right. You don't want to get shaken out of a good position.
Exactly. But then set it too loose, and it might not actually protect you from a big loss if things really start to go south.
So finding that sweet spot is key.
It's a balancing act.
Then on the flip side, you have take profit orders, which are kind of the opposite of stop loss.
Right. Instead of limiting losses, they're about locking in profits.
Yeah, you set a specific price at which you want to sell, and once the price hits that level,
boom, the exchange automatically sells your position, and you've secured your profit.
Love it. But the book wisely points out, you have to be strategic here too.
Of course.
Set that take profit too low, and you might miss out on further gains if the price keeps going up.
You leave money on the table.
Right. But set it too high, and you risk the price reversing before it ever hits your target.
You're chasing that last little bit of profit and end up losing a good chunk of what you already had.
Exactly. It's all about finding that balance.
Absolutely.
And then we come to leverage.
Leverage, the double-edged sword.
The book defines it as borrowing funds from the exchange to trade with more capital than you actually have.
You're amplifying your buying power.
Yeah. And while that can potentially lead to bigger profits,
it can also lead to much bigger losses.
Exactly.
Yeah.
The book makes it very clear that leverage is high risk, and it's definitely not for everyone. It's really for experienced traders who understand the risks involved. It even mentions that Coinbase might have restrictions on leverage, or they might not even offer it at all, depending on where you live and your level of experience.
Right. Different exchanges have different policies on leverage.
And something that the source really emphasizes is the fact that the cryptocurrency market is just inherently more volatile than traditional financial markets.
Oh, yeah. Prices swing much more rapidly and dramatically in crypto.
So that means, especially if you're using leverage,
you need to be extra cautious.
Extra cautious. And it also touches on liquidity again, which we mentioned earlier. It reminds us that this is all about how easily you can buy or sell an asset without causing a big price change.
Right.
Highly liquid assets, like Bitcoin,
tend to have tighter spreads and a lot of readily available buyers and sellers.
So it's generally easier to trade without causing too much price disruption.
Exactly. But assets with less liquidity, they can experience significant price swings, even with relatively small trades.
So, as the source recommends, always a good idea to check the liquidity of a particular cryptocurrency before you make any significant trades.
Especially if you're thinking about going big.
Yeah. And the key message here is even with a solid understanding of all these trading terms and concepts, cryptocurrency trading is still inherently risky. Continuous learning, staying informed about what's happening in the market, and being super disciplined with risk management are absolutely essential for anyone looking to trade crypto, especially on a daily basis.
It's not a game for the faint of heart.
No, it's not.
Okay, so we've laid the groundwork. We've talked about the market. We've talked about setting up your account. We've even started learning the lingo. Now, the source moves into what is arguably the absolute core of being a successful trader, and that is
risk management.
risk managed.
You got it. And the book really lays this out as the bedrock of any strategy that's going to be consistently profitable.
Especially in a market as volatile as crypto.
Yeah, you can't just wing it in this space.
Not if you want to protect your capital.
And the first principle that the source highlights is diversification. The whole don't put all your eggs in one basket thing. It's about spreading your investments across a variety of different cryptocurrencies instead of putting everything into just one or two.
Right, because if you only hold one or two coins and something goes wrong with those specific projects,
You're in trouble.
you're exposed. By diversifying, you're reducing your exposure to the unique risks associated with each individual asset. So if one takes a hit, the others might not, and you're not completely wiped out.
And the book even gives an example of what a diversified portfolio might look like. It could include like some of the established players like Bitcoin and Ethereum.
Right, the blue chips of the crypto world.
There may be some promising altcoins like Solana or Cardano.
And maybe even a small allocation to some higher risk, higher reward, smaller cap projects, if you're comfortable with that. And the key here is that how you diversify, what that mix looks like, depends a lot on your own individual risk tolerance and your investment goals. Someone who is more risk averse, more conservative, might stick to those larger, more established coins.
Right.
While someone with a bigger appetite for risk might be more comfortable venturing into those smaller cap projects, but always with the understanding that there's a higher potential for loss there.
Always a trade-off.
Yep.
And closely linked to diversification is the concept of position sizing. This is about being really deliberate about how much of your capital you're allocating to each individual trade or each specific cryptocurrency.
Right. It's not just about how much money you have. It's about what percentage of your total trading capital you're putting into each position.
And the source makes it clear. Overexposing yourself to any single trade can be a recipe for disaster.
Oh, yeah. One bad trade can wipe you out if you're not careful.
The book recommends, keeping your position sizes relatively small as a way to limit the downside.
Right. Even if a trade goes against you, if you're only risking a small percentage of your overall capital, the loss is manageable. You can weather those inevitable losing streaks without blowing up your account.
It's about staying in the game.
Exactly. And, a lot of experienced traders, they have these strict rules about how much they risk on any single trade. Maybe it's 1%, maybe it's 5%, but they stick to those rules religiously. It helps them avoid those big emotional swings that can come from taking too much risk at once.
Makes sense. And speaking of avoiding big losses, the book, of course, circles back to stop-loss orders. Those automated orders that sell your position if the price drops below a certain level that you've set?
Critical.
Absolutely crucial. And the source really drives home how important they are.
They're like your insurance policy in the crypto market.
Yeah, they protect you from those unexpected, those sudden price drops that can happen in a heartbeat.
Yeah.
But like we said before, setting those stop-loss levels, it's a skill. You have to really consider the current market volatility, how much the price is swinging up and down.
Right.
And you have to look at those key technical levels, the support and resistance levels that we talked about earlier.
You don't want to set your stop loss too close to your entry price, or even a small dip could trigger it.
Right.
But you don't want to set it too far away, or it might not protect you when you really need it.
And the source is clear. Not using stop-loss orders, especially in this market, can be a recipe for disaster.
It can be catastrophic. I've seen it happen, people losing a huge chunk of their capital because they didn't have the stop-loss orders in place.
And speaking of risky moves, the book revisits leverage.
Leverage. Always got to be careful with leverage.
Yeah, it's like playing with fire. It can amplify your gains, but it can also amplify your losses to an even greater extent.
And, the source even goes so far as to say that many beginners should just avoid leverage entirely.
Yeah, stay away until you really, really understand how it works and have a very high tolerance for risk.
And even then, you have to be extremely cautious. Understand that the market can move against you very quickly. And if you're over-leveraged... Liquidation, exactly. You could lose a lot more than you put in. So, the message is clear. Approach leverage with extreme caution. It's not a get-rich-quick scheme. It's a tool that can be used effectively, but only if you know what you're doing and you're very, very careful.
So beyond those, those core principles of risk management, the book wisely talks about some other crucial things to keep in mind, like staying informed. It's not just about looking at charts. It's about knowing what's going on in the broader market.
Right, you have to stay up to date on trends, on any news that might impact the market. You have to understand how the regulatory landscape is evolving.
And even those macroeconomic factors that we
Yeah.
talked about earlier. It's all connected.
It's all part of the bigger picture.
And the book emphasizes the importance of emotional discipline. Learning to make those trading decisions based on your analysis and your plan, not on fear or greed, sticking to your strategy even when things get a little bit crazy.
Which they inevitably will in this market.
Oh yeah, they will. And the book even suggests something that I think is really valuable. It talks about regularly reviewing your portfolio.
Taking a step back, looking at how your investments are performing, checking your risk exposure, making sure you're still properly diversified.
It's about staying on track. And it even suggests something called paper trading, where you basically practice your strategies using virtual money.
Oh yeah, that's a great way to get a feel for the market, test out different approaches without actually risking any real capital.
It's like training wheels for crypto trading.
Exactly. Get comfortable with the platform, try out different indicators, see what works for you without putting your hard-earned money on the line.
Love it. And a really important point that the book makes, and I think this is something that a lot of people struggle with,
What's that?
is accepting that losses are just part of the game.
Oh, absolutely.
Not every trade is going to be a winner. And the source, it says that it's actually those losing trades that could be some of the best learning experiences.
Yeah, if you take the time to really analyze them, you can often identify mistakes that you made, things you could have done differently. It's about turning those losses into valuable lessons.
So the overarching message here is successful trading, especially in a market as volatile as cryptocurrency, really comes down to having a robust, well-thought-out risk management strategy. Those core principles that we talked about, diversification, position sizing, stop-loss orders, being very careful with leverage.
Essential tools.
Absolutely essential. And it goes beyond those core mechanics.
Yeah.
It's also about cultivating that emotional discipline, staying informed, and being a constant student of the market.
Always learning, always adapting.
So you're getting comfortable with risk management.
You're starting to think like a trader.
Now, how do you actually choose which cryptocurrencies are even worth considering?
Right. How do you pick the winners?
How do you avoid getting caught up in the hype? The book has a whole section on evaluating cryptocurrency projects, which I think is really helpful.
Yeah, it walks you through the process.
And it really emphasizes that, you can't just buy something because it's popular on social media or because the price is going up at the moment.
No, you got to look under the hood.
You got to understand the fundamentals.
You got to do your homework.
Exactly. And the first and arguably the most important step, according to the book, is to analyze the project's white paper.
The white paper, that's like the project's DNA.
Yeah, it lays out everything. The goals, the problem they're trying to solve, their proposed solution, the technology they're using.
The team behind it, their roadmap for the future, the tokenomics, which is basically how their tokens will function within the ecosystem.
Right. And it advises, really look for clarity, feasibility, realistic goals. Are they promising the moon and the stars, or does it actually seem achievable?
Yeah.
Are there any red flags? Like, are the promises too vague? Do the goals seem unrealistic? Is there a lack of detail about the technology or how the economics of it will work?
It's about separating the substance from the hype.
Exactly. And then once you've kind of gotten a feel for the project itself, you've read their white paper, you got to look at the team.
The team, the people behind the project.
Yeah, because ultimately it's people who are building this stuff.
Right.
So look at their experience, their expertise. Do they have a proven track record in the space?
Yeah.
And the source stresses transparency here.
Huge emphasis on transparency.
Are the team members public? Can you verify their credentials?
Anonymous team members, that's a big red flag.
Absolutely a red flag.
If they're not willing to put their names and faces behind the project, that's a concern.
And it's also worth looking at whether they have a solid advisory board. Are there reputable people from the industry who are lending their expertise to the project?
I can give you some confidence.
Definitely. And then, another thing that's often overlooked but can be really important is the level of community engagement.
The community, the people who are supporting the project.
Yeah, you want to see an active community that's genuinely enthusiastic about the project, not just a bunch of hype.
Right.
So look at the quality of the discussions that are happening online.
Are people actually engaging with the project, or is it just artificial hype? Are there a lot of fake accounts pumping the project?
Yeah. And it's also worth looking at, are people actually participating in the project?